Imagine a future where your finances are not just surviving, but thriving. A future where your money works for you, generating steady cash flow without the daily hustle. This isn't a pipe dream, it's what dividend investing can offer. Today, we're diving deep into how this approach not only builds wealth for you, but also for future generations. If you're ready to transform your financial legacy, let's get right into it. Dividend investing isn't just an investment strategy, it's a wealth building powerhouse because it revolves around investing in companies that pay you a part of their earnings regularly. These aren't just any companies, these are the established players that believe in rewarding their shareholders. And with the right strategy, this can be a game changer for your financial stability and growth. I know the investment world can seem like a wild ride. You got market swings, economic downturns, and high risk ventures that might promise high returns, but they rarely deliver consistently. Plus, there's a challenge of breaking free from all the financial struggles that many of us inherit from those generational curses. Well, how do we shift from short-term survival to focusing on long-term wealth? Let's talk about it for a second. This is super important because as I look at Procter Gamble, for example, it's a company that's been paying dividends for over 130 years, or Johnson & Johnson. They've increased their dividends annually for 58 consecutive years. These aren't just companies, they're gonna be partners in your investment journey. And as an aside, we talk about different sectors all the time when it comes to sector rotation and investing in stocks. If you look at Johnson & Johnson and Procter Gamble, well, they're consumer defensive, right? So a lot of the stuff that they sell, you have to have them. Like they don't sell TVs and computers and consumer discretionary stuff that you have when you have a lot of money. Like Johnson & Johnson sell medical stuff and vaccines, and I remember the baby powder my kids used to have, and Procter & Gamble is deep into the game as well. So this is stuff that you have to have. They have deep moats around their business, and this is why they're able to offer dividends to investors like you and I. Another key factor that people don't think about is that historically, any of these dividend paying stocks have shown less volatility and better performance during like kind of shaky economic conditions. There was a report that came out by JP Morgan that said dividend stocks have outperformed non-dividend stocks with less volatility over the last 40 years. Well, let's break that down for a second. I think a lot of people come in and they're just like, oh, I want to get the next big bio or tech stock and get those crazy gains without realizing that there's also a risk to take when you're jumping in and you're investing in those riskier sectors. And I'm not against it at all. There's a percentage of my net worth where I don't mind investing in that stuff. I'll do videos and I'll talk about some of the growth stocks because people are asking for it, but you have to start with the foundation. And I talked about it before in another video. ETFs and boring companies like Johnson & Johnson and Procter & Gamble and some of the others that offer those dividends are going to set the foundation for your company and help you build those blueprints to actually start being a smarter investor. Remember, a lot of people say that, oh, I start with a foundation when I build a house. No, you don't. You start with blueprints. So if we're building the blueprint of an investment journey for a beginner, like just protect home first. Get these safe foundational things, dividend stocks, ETFs, boring crap that a balance sheet will put you to sleep. But at least I know that instead of saving my money and watching it erode due to inflation, I can put my money in the S&P 500 using things like VOO, which I talked about in other videos when I talked about ETF investing, and your Procter & Gamble and your Johnson & Johnson, and collect my dividends, but also know that's low risk money. And then when somebody's like, oh, and you should invest in this next crazy tech stock or whatever's running, I know that any money that I take is going to only be a small percentage. Typically for me, that's no more than 5% that I'm investing in like the riskier stuff. If you're younger, you may have a higher asset allocation, but super important to think about. This stuff is going to always outperform because it's super boring and it's not crazy growth, but it's consistent. And you need to have a consistent baseline when you first start investing in the stock market. But you got to be careful. It's not just about grabbing any dividend stock. It's about choosing the right ones. It's super important to understand the payout ratios and the sustainability of a company's dividend policy and how the dividends can grow over time. We talk about that in other videos when I dig into balance sheets as well, but this is how you're going to actually build a resilient portfolio that's not only going to withstand all the economic downturns that are of course going to come, but are going to thrive and help you pave the way for generational wealth. Another sector of dividend investing is REITs, or real estate investment trust. I'm going to do a video soon that dives deep into that, but that's another way to get that income stream coming in, but also to build those solid foundations with these dividend paying companies and these real estate investment trusts that own a lot of these buildings that some of your favorite companies actually have long-term leases on, to get some great dividends in return with a lower level of risk. And if you're a new trader, don't forget to click the link below. I have a free lesson plan that's going to actually walk you through some of the top mistakes that new traders make, so you can be a little bit ahead of the curve and not end up losing all your money before you even get started. Because we're trying to pass this money down through generations, because remember, here on the channel, we're all about building that generational wealth and breaking financial generational wealth curses so you can leave more behind for your family when you die than just debt. But until next time, it's your boy Michael T. Ragland. I am out. Peace.